All right, guys and gals, I'm going to take over here and from Steve. Good morning. Happy Friday. Hope everybody's doing well. And welcome. As I want to go in a little bit more depth on kind of like what I was talking about on the FA.C.E webinar is that and good morning, Hugo, Alexander, and everybody else too, of course. I just wanted to talk to everybody about like these moves in the yen. I mean, I got caught in the Canadian yen last week. Then I got caught in the Aussie yen and the Euro yen this week. And I'm like, man, these things are really breaking out. And, and it did shave off a lot of my gains that I've had over the last, month and a half or so, I would say, because it really ate into my September P&L. And it's at that point where you go, okay, well, now I have to realize that we've got some pretty big moves that have happened. And, could they be peaking here? Could they, stop? It's possible, but, they're big and you got to respect them. Right. So, that was the point I was trying to make on, today's webinar is we got to respect these moves because they are big. All technicals have been just run over here. So just when that happens, you're in a pretty big move. And so, yeah, I had to, take a step back and go, okay, well, now I'm going to actually probably reduce my positions down to basically nothing and, sit and wait for a new opportunity, and kind of lick my wounds from this last week. So last week and a half, really. So anyway, that was the crux of, of the conversations that I was having in the chat room earlier this morning, because it was like, okay, you got to, there are those times as a trader, you have to come to those realizations that, I have to, buckle down here and, take some losses, regroup, and then, get on with it, because I don't want them to get worse. I don't want to go into a situation where now I start giving away multiple months. No, it's like, okay, I have a bad week and, you have to buckle down and, get back into it. And that's exactly what, I'm doing right now. So let's talk a little bit about where currencies are at and where they might be going. First of all, the Euro's tight consolidation here, seeing a little bit of a bounce, in the Euro, following the data. But I think I know Greg is, he was, making the bullish case. Look, I'm not convinced yet, and we have to get above that 116.50 before I can turn bullish. And, one thing that would help is actually getting above this trend line here, which comes in at 116.25. So let's write that down. Pulling up the bias chart, by the way. Here we go. Okay. So 116.25. 116.50, and that is key, and that's got to hold to keep us bearish. But just remember, we may have a bias, overall bias. That doesn't mean the bias is going to stick, and that doesn't mean we can't have intraday moves counter the bias. I mean, you've seen the euro kind of bounce this week, but in all actuality, is the euro really moving a whole lot? I mean, you could actually almost argue the point that, let me get rid of this here. I want to make this a different color too. So we'll do that, and then I'll have to redraw. So we could probably make the argument here that maybe, this is a new channel that's developing. The fact of the matter in regards to the euro is it's really not moving a whole lot, right? And it's got to be frustrating, for especially if you're bullish, because if you're bullish, you're like, come on already, like, stocks are bouncing, why isn't the dollar weakening? So I'm sure there's a lot of frustration out there. If you're short, you're like, well, I mean, we're staying below 116.50. So, no reason for me to be long or cover up my shorts. But if you're short, if you're long, looking for a counter trend move, it's probably getting a little frustrating, especially watching equities rally 4-6% over the last couple of days. And, the euro hasn't done anything. So I'm sure that's got to be a little frustrating. Right. Okay. So let's just note that support intraday probably is this 115. Greg has said 115.70, which I guess you could mark that previous high here and previous high here. So I'll go with that 115.70 for now, but obviously what's really key is 115.25. So I wouldn't be surprised if we hold 115.70 today. I mean, give me a real good reason the market should be, moving aggressively right now in the euro. I don't think there is one, right? So sterling. Okay, so sterling had a nice move. We're at the top of the resistance zone. This is previous support from back here, previous resistance here. We are at resistance right now, 137.50. I should write that down or write today's highs down. And then after that, this is the trend line. This is what flips us from bearish to neutral, getting back above 138. So we can write down 137.60 because that's pretty much the highs today, 138. And while that holds, we are bearish, but we get above that, then it's going to shift, back into a range. Right? You could go, this is a channel. Right? Something looks like that. It roughly, But you can see we just keep knocking our head up against these levels, and then that's it. All right, let's go to the Aussie. Now, the Aussie, it's really interesting. I was thinking, when I got up this morning, I was looking at the Aussie and I'm like, yeah, good. Look at this. We continue to carve out new highs hourly. So maybe we're going, but the slump below these lows has me a little like, I'm wondering if this is going to hold. And remember, I'm drawing symmetrical triangles here based on, previous highs. That doesn't necessarily mean what I'm looking at is what the market's looking at either. It could be very, very much like this. We could end up drawing that out for next week, so it's hard to say. What I can say right now, as of right now, as we're looking at this, we are making lower highs if it holds today, right? So by making lower highs, that means we are consolidating in a triangle. We get above highs and then we're going, okay, well, now we're going to see a much bigger recovery. So right now, as of today, as of, the time of this filming, we got to be respectful that we're not able to take out these highs yet. And the fact that the hourly charts look a little, hold on, the hourly charts, starting to hit these, through support a little bit, you got to be careful. So I'm going to write down 74.40 as being support. Shoot. I'm sorry. I don't know why I didn't get the sterling yet. I thought I had already got that out, which I didn't. Obviously support's going to be right here now, 136.65, because you can see how holding, right? This was big resistance on the way up, big support on the way down. So 136.65. I think that we wrote that as resistance probably every day of the week last week. So 136.65. So we have a situation where, previous resistances turn support. Okay, going to the Aussie. So back over to the Aussie dollar. Key resistance. Support is going to be, dips down here. I this is that inverted head and shoulder pattern neckline. So any dip down to 73.20 is going to be supported. intraday, I would say that 73.80. So we're going to write 73.20 and then 73.80, just in case we, dip down there today. We might find some buyers down there. Again, it's Friday. I'm not expecting big moves. So, getting a move down to those levels seems logical to me. Like, Kiwi. All right. So I was looking at this earlier on a daily chart. I was like, oh, look at that. Trend line, sticking right through there. But again, I have to remember I redrew this to fit at the time, to fit through, to this high. So this is not relevant right now. That's an accident. Spike highs. This trend line is probably more key. So what I'm trying to say is we could see further upside here to this resistance, these levels right here, if we can scale above highs today. I mean, if we can scale above all these highs, then we're going to have resistance coming in at, let's just call it 70.85. But I still think we're range bound here too. Possible triangle consolidation, as you can see. And if you zoom out a little bit and you go, okay, well, perhaps we are looking something more that looks like this. Maybe stocks go to all-time highs. I don't know, but this is kind of where this is what we're seeing now. And you can see the 200-day moving average is right above that at 71. So I think there's a lot of resistance up here. Does that mean you should be shorting the Kiwi right now? No, but if you want to short Kiwi against something else, knowing that the Kiwi is right up here, that might be an idea. Like, how about something like this? This is just food for thought. How about going along the Euro Sterling? Euro Sterling, pound New Zealand. You can see clearly that we're holding through these supports. We're back at the 200-day moving average. Maybe this is something you get long. You don't have to go long out or go short outright Kiwi dollar. You can think about and I do this analysis all the time. I look at the dollar and go, well, I don't know if I really want the dollar involved in my bearishness of the Kiwi because we're up against resistance. Great. So I'm going to express that how. So, and I go into, that's how I end up getting in a lot of cross rate trades, So anyway, that's just something to think about. Okay. So support intraday. I mean, it's going to be down here, but intraday, I would say, you can see these previous highs here, all this hourly stuff. This all comes in around 70.20, 70.20, 69.90. Okay. And then 69.90. Dollar Canadian. So this one stopped me out overnight. I had a really tight stop and I wasn't playing, giving it too much, but of course it's doing what Norway did. Stopped me out and then it's just going to end up bouncing. Norway did that too, although the US dollar Norway is back down again, but the dollar Canadian is, below that 618, below the 127% extension. If you don't recall, I've, been trying to pick that up. And like I said, trading has not been my my forte this week. Previous support that should act as resistance on the way up. That is 124.20. Ooh, watch this, guys. This is big. Oh shit! That hold on. That is a big. Let's see if we can hold. IWM at the open here. Damn. That's gonna be a big breakout if it does hold. We'll see. We'll see. Okay. I'm not convinced that we won't get a move, like this, false break. I'm not going to put it past the market there. Okay. Sorry. Going back into analysis. This is a big one because this was one of the charts of the day, like earlier this week. By the way, did anybody watch that Squid Game on Netflix?
I don't get it, mate. I really don't.
You don't get what?
Why it's a success. I really don't.
Did you watch it?
Yeah.
You know why?
I wasted my time watching it. Yeah.
I actually thought it was interesting. You know why I thought it was interesting?
Why?
Because it didn't do what you expected it to do. And that's the whole point of like cinema. Like and I'm not going to spoil it for anybody, but if you watch something and you go, oh yeah, that played out exactly how it was supposed to play out. Then,
I kind of disagree that the twists were. Anyway, it's okay. It is what it is. I don't understand what they're trying to tell us. It's supposed to make us think about mankind and all that, but I don't
know. I don't think it was supposed to tell us much of anything. I think it was just supposed to be an interesting story, right?
Yeah, maybe. I don't know. Maybe I'm weird, but I didn't like it. Sorry.
You are weird, but you're also bald, so you got that going for you. No, I didn't like the ending as much as I think I could have. And I had this conversation. My 14-year-old loved Squid Game, by the way. He loved it. He thought it was great.
Yeah, that's what worries me. Kids loved it, and it really worries me because it's weird. Anyway,
it's a weird world we all live in, and your girls are going straight into it head on.
Yeah, I know. I'm sending them to a convent. That's it.
Resistance for the dollar Swiss should be the underside of this trend line, which will come in around 92.80. I'm going to say this, the 50% retracement continues to hold. That comes in at 91.95 and 92.80. So 91.95 and 92.80. So I have to say, K-Man put in some things in the chat room about, from a broker, about some warnings about leverage and, adjusting leverage. If you guys are in our chat rooms, I just want to say this, please, whatever you see in there, like when I get past research, it's not supposed to be passed around. Right. So if I post research in our news and research room, it's not supposed to be like copy paste, give it to somebody else. Please keep it inside of the confines of our organization. That's why we share it with you guys. So just please keep that in mind. By the way, this is still bearish. So anyway, he was mentioning how some of the brokerage firms are tightening up on their Swiss margin requirements, and so you have to that's scary when brokers start doing that, because you're like, okay, what are they preparing for? By the way, resistance here in the dollar Norway is 851. You can see we're still holding that megaphone support. We just keep testing it and bouncing. I'm not sure if we're going to bounce here, but this should be, next support is going to be 836. So we have 840, 8.36, oops, 8.40, resistance, 851. I don't want to put bearish because I do feel we're just in a big range, but obviously crude oil is having a lot to do with this. So just keep that in mind. Dollar MEX going to move along. Hey, dollar MEX is holding up really well. And if you're shorting this because stocks are stronger, you're probably a little frustrated. So I'm going to continue to say, while we're above 2040, you have to stay bullish. Resistance is going to be higher than that. Right up here, 2065, and then obviously 2090, but intraday will be 2065. Then you have 2090, which is key. Okay, and you have to stay bullish while we're above those levels. And if you look at the Rand, by the way, I know this doesn't go on the bias chart, but this is a channel. Dom in the chat room has been pointing this out. look, it's not really going down either based on how equities have reacted. So just keep that in mind. Dollar yen, unbelievable moves here that, I mean, resistance is 114.50. Above that, it just starts taking out round numbers. So just and this is bullish. And I'm gonna put an asterisk next to 114.50 because that is important resistance. Because once we take that out, we are now seeing 2017 highs, and that's from 4 years ago. So, and then you start going into, oh my God, where are we going to go from there? Like then we start seeing levels that we haven't seen, since 2016. So things can accelerate, and that's why we have to be very, very careful with these yen pairs up around these levels. Okay, support 113.75 is support. Dollar index. I know you guys don't like it, but believe it or not, it's still bullish. It's bullish while we're above 93.50. And we are holding any dip to 93.70 right now. So if you're a dollar bear, I know it's frustrating. Okay. And we've got to stay bullish while we're above those levels. We're just marking time, in my opinion, just like we were doing down here. We're just marking time before we get an eventual break. So 94.50 remains, and you guys know this is 94.50, 94.75, and that's major, right? Both of them are pretty major, but 94.75 because that's the spike high from over here in 2020, early or September 2020. The 94.50 is the 38% retracement on a monthly and weekly basis. So they're all both really, really. Brand asks, are we in a bearish dollar index rally? You would think, right? You would think, and I know what bears are thinking too, Brand, as long as we are below this 618 retracement, or sorry, I'm keep saying that wrong. While we're below this 38% retrace of this move, bears will think that they are in control. But we get above that, and that's when. So right now, to answer your question, I guess in a nutshell, yeah, I think you have to assume we're in a bearish dollar, just a dead cat bounce. But that's why it's so pivotal that if we get above that, I just look at this, dollar index. This is a daily chart. Dollar index bullish, working off overbought conditions. Great. Once we're done working off overbought conditions, guess what it frees us up to do again? Another rally, right? So anyway, I'm not as, oh my God, look at crude. Holy crudeness. Holy cow. Anyway. All right. Back to sing it, Stel. Back to life. All right. Sorry. S&P going. S&P is at highs. IWM trying to hold. S&P next resistance. This is going to be major at this 44.80. Well, 44.90 is the 78% retracement. So I'm 44.90. I'm taking us off the bearish designation back to the range designation. I don't believe in, as I told you guys, I don't believe in this inverted head and shoulder pattern to an all-time high. It can happen. I'm just not I'm not a fan of that setup. And I'm also a believer that as the market looks good right now, this is also a perfect place for a rug pull too. where the market could, just kind of give it up. I'm not saying today, but I think today intraday, while we're like, if you're trading intraday S&P while we're above here, you have to be bullish. But we break back below like 44.30, then we're going to trade back down towards, we're going to start, moving back towards 4,400. So I'm going to write down 44.30 and then 4,400. Oh, shoot. That was wrong. Okay. Something like that. Bitcoin. So Bitcoin looks like they're going to get ETF approval. So Steve's favorite ETF that he's going to be buying every single day will be Bitcoin. The new Bitcoin ETF that's going to be launched on every exchange known to man coming to you. That's put a nice little bid in Bitcoin. Right, Steve? Is that what we're going to be buying?
Absolutely.
Every day, right?
Nah, I'm going to buy all I can first day, so I don't have to buy the rest of the days.
That's good. Then this way you'll be a gazillionaire by the time your son is in college.
Absolutely.
You see, you heard the song. It goes, "I'm gonna be a Bitcoin millionaire or billionaire, millionaire."
No.
That's funny. That's funny.
It's a really good. That's actually a really good one. So 60K, we have resistance. Then beyond that is 61 2. And I told you guys, I met with Katie Stockton. She's a good technician, and she's like, I don't see any reason why Bitcoin won't hit all-time highs. She's like, I do not see this as being similar to 2017. I'm like, oh, okay, very good. So she's pretty bullish. Support. This will act as support now. We thought maybe we might get back down to 51. Not even. You can see all those dips are being bought. So 53,000. And I think we have to realize we are, still below these highs, and we're up against channel resistance. And I think a lot of people, I'll tell you guys this. I was talking with the guys that I used to trade with, and these guys were really bullish Bitcoin, waiting for that news that happened. So now that the news happens, are you bullish here? Maybe you get to buy the rumor, sell the news. So, that's something else to think about. How many people were long Bitcoin waiting for positive news? We got this positive news, and Bitcoin's holding up well today, but
Yeah, that's a good point. I remind you that that high in Bitcoin, if I remember right, we got it the next day after Coinbase went public. Remember?
Right here. Yeah, I'm not 100% sure because I don't quite remember, but yeah, that might be it, right?
Yeah. So it was, another example of buy the rumor, sell the fact or the news.
Yeah. Silver, I'm just going to do this real quick. 2360. That's obviously that trend line held. And so we have to, I know I've kept these on bearish, or did I put them back in range? Holy cow. I forget. Let's go back because they're very close to flipping, right? No, they're back. They're in range. I don't want to stick them in bearish today, but I think we have to respect the fact that this trend line held. The 618 is holding, right? So, and I think there's a lot of disappointed bulls right now. So, if we get below 23, then we're talking back at 2220 again. So,
Blake, your Bitcoin support is wrong. It's 53, isn't it?
It is 53. Thank you.
And thank you, Denise.
Thank you. 23. Thank you. You are correct. And then that's because when Steve talks, it just flusters me. 1800.
Happens to all women. Don't worry about it, Blake.
I walked right into that one. Holy cow.
You did.
All right. 1800 is resistance, and this is also, obviously the 200-day big failure here. This is a daily chart. Steve, what kind of a chart pattern is that?
If we close like this in evening star formation.
Yeah, which isn't good. So 1800 And I'm gonna keep silver. I'm not so bearish right now, but gold is, since it was at the 200-day moving average, that candlestick formation setting up. I mean, we do have to be a little bit more careful here, right? So, support 17,000, 17.5. So 1750. All right, guys. Here's your bias chart, and I just want to say good luck, everybody. I'm gonna be tightening up positions, and
you're tightening with the Fed. Good.
Yes, with the Fed.
Are you going to shrink your balance sheet?
Yeah, I'm going to shrink my balance sheet. That's exactly
the wife does that. Or was it just my ex-wife?
That was your ex-wife.
That's a good one. So wives are hawkish by default, right, Stelios?
I love my wife, by the way.
The ex one or the current one?
My current wife. My current.
Okay.
All right, guys.
Yes. Well, okay. Thank you, Blake.
Thanks, guys. It's all yours, and have a good weekend, everybody.
Thank you, mate.
Okay, so enough about wives. What's happening
Ex-wives
with the markets?
or current wives?
So markets are kind of, let's see how we close the week, but overall it's been a good week for risk and for stocks and for, I think for oil as well. We haven't had a bad week for oil
since
August. Wow, since August. So, I mean, and let's see how we close. We have metals which are retreating today, just like we said on FACE. A pretty important resistance, especially for gold, 200 DMA, and there was a downward trend line. You have it there, all of it.
Yeah. It's a nice triple confluence of resistances. We talked about it yesterday again. So and I said yesterday that if you want to be short the dollar, gold, this is where you do it. But we break above that, and then it's a totally different story. Same thing with
actually platinum is silver. I was going to say platinum is diverging. It's outperforming.
Platinum is doing just fine. It has broken out of its descending channel and doesn't seem to even care about the other metals turning lower today. And I talked about it a week ago. I think that the gold platinum ratio is looking very, very, very
bearish.
Interesting, technically interesting.
Yeah.
I think that platinum might have a lot of overperformance ahead, and I even suggested it last week as a potential trade for somebody that doesn't want to be involved with the dollar and its effects, right? So if you're confused, if you this way you don't really care, because you are neutral the dollar and you're just taking a relative position of one metal against the other.
Yes,
as simple as that.
And speaking of the dollar and currencies, it's interesting because today the euro and the dollar are relatively stable. Actually, the only two currencies which are moving of the majors is yen and sterling. And yen, Ryan talked about it on FACE. Yen is probably on the back of there must be some big flows going through. And when I've seen it. But when I worked at the bank, I've seen it. When there is a legitimate flow that has to go through, it's just a one-way train. It just keeps going until it's filled. And the yen seems to be flow-driven. The pound, I don't think so. But you know what? I'm happy that the pound is getting towards where I want to get long in euro pound.
To be honest, I'm looking at the pound and I see nothing bearish with it. Nothing.
Yeah, I agree.
We've had this massive move higher, and we had this textbook corrective move. We even had a textbook.
It follows the breakdown,
short-term breakdown, right?
Yes.
So I really, really believe that the chances of a legitimate break higher coming up within the next few days are very high, and I don't think somebody should be trying to fake this if and when it happens.
Yeah. Yes, I agree.
And something else, I know that the euro is performing a lot worse, And this has been causing the euro pound to be pushing lower. And here is one of the things I wanted to talk about today. Euro pound today, breaking out of this rectangle. Keep in mind that we've been creating this rectangle since the middle of February, right? So this is a very long period for staying within a range of this size. And I don't think you should dismiss the breakdown as irrelevant. Now, I remind you that this now targets, and this is actually interesting, you take the extension of this range, you project it, and you'll notice that it targets a little bit lower than 82.80. And why is 82.80 very important? Because, we've found a low there several times since 2016. So, we end up breaking below 82.80. That's going to be a super, super bearish development. So I think we close below this rectangle I'm talking about today. And the next downside target is 82.80. So euro pound seems like it's very likely to produce some very decent follow through. Keep that in mind.
Well, I've been saying 83s for a while since it was at 87.
Yep.
So what was it? And I'm depending on how it gets there, how quickly, how the momentum, the volume, and everything. Not the volume, but the momentum. I'm going to start accumulating longs, but I have to.
By the way, one more comment. If there are any people out there believing that the cable can be breaking up to the upside, with all the bullish implication that has, and the euro being very weak, you can just simply forget about it, right? There is no chance whatsoever. So yes, there can be a relative overperformance continuing in favor of the cable, but if you really think that the two of them can start moving in opposite directions, there is absolutely no way. Right? Absolutely no way. Yes, there can be factors, rare factors that can create, such an event. For example, we had Brexit, right? But other than that, you shouldn't expect the fate of the pound to be really different from the fate of the euro. So would I be buying the euro? No. And why wouldn't I be buying the euro? Just for a simple reason. Because if you're looking to buy something against the dollar, why would you buy the currency that behaves worse than others, right? You always want to buy a relative strength against relative weakness. You want to, if possible, you want to buy the strongest or one of the strongest currencies against the weakest, or at least one of the weakest, right? In this case, if you end up buying Euro USD, yes, it absolutely can work, but why would you want to buy one of the weaks against the dollar and not one of the stronger ones against the dollar, right? I mean, your chances of making more money if you're in the right side of the market are a lot better by buying something that behaves a lot better than the euro does, right? For example, look at the pound. Pound behaves a lot better. Look at the Aussie. The Aussie has been behaving. I'm not talking about specifically today, right? It has been behaving a lot better. Look at the Kiwi. The Kiwi has been behaving a lot better. Look at the Canadian dollar, right? It has been behaving a lot better. Look at the Norwegian kroner. It has been behaving a lot better. So, choose something else to be long against the dollar if that's what you want to do, if you want to have a dollar short position exposure in the market. What else, Sel?
That's pretty much it. Cryptos, we talked about cryptos. Kate Stockton is bullish. He says new all-time highs, but really that's only a couple of thousand away, isn't it? So,
yeah. To be honest, I'm not a buyer of Bitcoin. I wouldn't be, because I don't want to buy something that I that I think it has a possibility of exploding higher, but also the exact same possibility of imploding lower. I want to own things that I understand how they're driven, and I don't feel they're bubble driven. But technically speaking, Bitcoin has done nothing wrong, right? So I agree with her. Looking at this chart, I see no reason why Bitcoin can't break higher to new highs, right? It is what it is, and that's true. That is indeed the case here. Now, admittedly, it's interesting that you remember we had the mania with Dogecoin. Look at Dogecoin. Couldn't care less about what Ethereum and Bitcoin does, right? Or look at XRP and others. So this seems to be, in this case, mostly a story of the two majors, right? Bitcoin and Ethereum, which in my opinion, if you're asking me, it's a healthy thing, because I've said it before, right? I don't know if Bitcoin is going to survive. I don't know if Ethereum is going to survive. I don't know if they're going to find an equilibrium price, what that is going to be. And I think that anybody that claims that they do know, they're going to be vindicated or look foolish based on the outcome, but it's still just going to be a random lucky guess, if you're asking me. And that's why I don't want to participate in that. I don't want to. If I want to do something like that, I'm going to go to the casino and play my money there and at least have some fun. But I can tell you one thing for sure: we currently have more than 10,000 cryptocurrencies. I strongly believe there is zero chances that more than 1% of those are going to even exist in a few years' time, right? Obviously, Bitcoin and Ethereum have by far the higher chances of being among them, right? I mean, yeah, clearly. But having to do with a lot of the smaller ones that have been created and keep getting created by the dozen, I think they're going to vanish. They're simply going to disappear. And people that will have quote unquote invested their money there, they're going to lose it all, right? Some of them are going to make money that want to swing trade them, but net result is going to be that all the money that will have been dumped there are going to be completely lost. I mean, we can make arguments about the need for the existence of a few of them, but more than 10,000. Who's going to incorporate them into any type of financial structure, right? What are you going to do? You're going to create a company that accepts 10,000 different cryptocurrencies or whatever. I mean, just not happening. End of story. I think the same thing is going to happen with the value of the vast majority of NFTs that are currently being created, like by the dozen. In any case, going back to the rest of the markets, if you remember, I said yesterday, I pointed to specific markets I'm looking at being at or approaching key levels for me to get the signal that dollar might be about to really move lower. One of them was clearly the dollar itself, meaning the Dixie, right? 93.50. We still haven't broken down below it. As you see, we're at 94, so no breakdown here. Aussie, the cable, etc. They haven't broken, but some of them have USD CAD, USD NOK. But what seems to be happening here is that the S&P seems to be making an attempt today, and I know it's extremely early. I mean, we're talking about pre-market hours, right? We seem to be making an attempt to break higher. And as I was explaining, I don't see, looking at all of the indices, right? Looking at the S&P, looking at the Dow Jones, which is trying to do the exact same thing the S&P is, right? Meaning the Dow is attempting to break higher as well, not from a descending channel as the S&P does, but from a symmetrical triangle in this case. Look at the NASDAQ poking its head above this descending trend line resistance as well. Blake talked about the IWM breaking through. I don't think the IWM is breaking through. Yes, it is breaking through a shorter term trend line, this one, right? But for me, the real breakout here would happen, and you can see why when I zoom out, right? Once we break through like 232, and you know, you want to give it a little bit more space, why not 235, right? Because you can even, you know, turn this a little bit to a horizontal resistance. There you go. There you go. Right. So, you know, I pay more attention to this because this is a very formidable formation dating back to January, right? To the first days of January, which means that we're already like 10 months into creating this. And I think a break above 234 to 35 is going to be a very, very bullish development and very likely to happen. So Nasdaq attempting to break higher today, Dow attempting to break higher today, S&P attempting to break higher today, IWM, the Russell underperforming a little bit, but I do think it's a matter of time. You know, if the others break, it's a matter of time for the Russell to follow suit. I don't think there is a chance that you know, we can stay a lot longer with other indices breaking higher, trapped in this range. Now you want to see at some of the European indices, look at the look at the DAX looking exactly like the S&P. It's like a copy of the S&P, right? Now, it's a little bit funny because I remind you the traditional correlation was between the Dow and the DAX, and not the S&P and the DAX. And the reason behind that was because the Dow was a lot more an index that was a lot more heavy industrial, you know, companies, and you know, same applies with the DAX. But currently it behaves like a copy of the S&P, so you know, it is what it is. The DAX is attempting to break higher, and as I said before, all these moves lower look 100% corrective to me, which means that I believe it's going to be a very big mistake to try to underestimate the importance of this breakout and fade them, right? So keep that in mind. In my opinion, as I said, exactly as I said about the USD yen when it was breaking higher, that I said, listen, this looks to me like a legitimate break and you shouldn't be trying to fade it. I feel that the exact same fate might be shared by the indices. And that's what I think. I also haven't changed my mind. I mean, the gold and silver might be getting rejected today, but I'm not changing my mind. I think that it's a matter of time for gold and silver to inevitably follow higher the rest of the assets. What does crude oil, natural gas, copper, nickel, blah, 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 so on and so forth know that gold and silver don't? They're just more easily manipulated. But trust me, you can't keep manipulating them forever because there is a lot of demand for the physical thing. And at some point, the financial market manipulation of the prices of gold and silver is going to blow up in the faces of the people that do it. And saying that gold and silver are being manipulated in the financial markets is not a conspiracy theory. Stelios can attest to it. Stelios, how many times have they caught during the past few years bank and institutions manipulating the price of gold and silver, and they fine them for it?
I don't know the number, but they've been fined quite a few times, but the fines are like, 7 million or 10
yeah,
million.
of course, and that's why they keep doing it.
Yeah.
But I mean, it's not even a conspiracy theory. I mean, they've been accused.
They've been guilty. Yeah, they've been found guilty.
Yeah, they've been found guilty for that multiple times. So you know, we know it is happening. It's not a question of if.
Yeah, it's funny, but it should be sad, really.
yeah, indeed it is. So yeah, more or less that's what I have to say. So I think it has been a rather interesting week. In the forefront being all the yen pairs. I remind you, I told you weeks in advance, don't fade breakouts in yen pairs. All of them looked corrective, all of them. Right, and we've had this massive moves higher, and I still don't see any argument to fade them. Now, especially with indices breaking to the upside, that should put extra fuel under the USD yen. And I do think that yields are going to follow as well. Usually it happens the opposite. Usually yields lead, but we now live in strange times, right? We live in strange times because equities used to follow everything else, and now we have everything else following equities, which is really, really unusual. So yeah, it is what it is. And this was more or less the synopsis of what I had to say. I'm going to be more than happy to answer any questions that we have. Bitcoin 53 support. Oh yeah, okay, that was for Blake. December 18th is final decision, BTC ETF. There are several stages to go through before the, yep, okay. Are we in a bearish DXY rally? Yeah, Blake already answered that. I agree with him, by the way. I've told you before. The key level for the DXY is 93.50, right? Technically speaking, we can't make a very strong argument for a bearish dollar, not fundamentally, technically, as long as we trade above 93.50. But we break through 93.50, and I think there is going to be strong evidence that the DXY might have topped out. We're already seeing some short-term divergences, right? You can see it here. There we go. Here it is on the daily. There you go. So, only thing that's missing is the breakthrough 93.50. We have all the rest. Okay, as it seems, no more questions. So I wish you all a wonderful weekend. And I think there is a good chance that we're going to have a good week ahead. Really. I see things starting to move, which is exactly what we want. And I'm looking forward to it. So,
all right,
charge
Steve,
up your
thank you.
batteries. Enjoy the weekend. Thank you, Stelios. And see you on Monday.
Cheers, everybody.